This video is about BullWhip. Just to give some background first, I think one of the hardest things in technical analysis on stocks is the fact that there's so many stocks to choose from that creating method or code that A is sufficiently robust or B is sufficiently rare is incredibly difficult, and by and large many people just don't even attempt it. The way round it is either to create a very small world of stocks that you concentrate on and trade them that way, or scan through lots of stocks and wait for the perfect setup. What we've done at Fourth Dimension by trading time is do a lot of the background work, analysis and testing to hard code certain technical criteria that we've created so that we do the work for you. And BullWhip is one of the key tools in your armory associated with this. What it tries to do is to get the corrective phase to a bear move, although having said that, it's possible that actually quite minor corrective phases, so false breaks down, can sometimes produce a signal as well. What I've got here is Apple on a daily, and really I'm just going to highlight how rare these signals are. There's only actually been two in the history of the stock. So the first one is all the way back in 2010, bit of a sideways move, a false break lower, and the BullWhip is signified by that little green dot. If I then scroll through, see the next signal was at the beginning of 2014, and that was very much a breakdown, as you can see a gap lower that then was rejected. Both instances, as you can see, the signals were pretty tremendous. To give you some idea of how you can try and build your world around BullWhip, there's two ways that you can really attack this. I've done a lot of testing over the years on a raw basis to just get some idea of the accuracy of the signal, and the most recent bear move was obviously with the Ebola crisis back in October. And to give you some sort of idea of what BullWhip actually did, it created over about a 2 to 3 week period around 500 signals in a world of about 9,000. Now obviously you can't trade all of those, it's too many, but the accuracy of those signals, approximately 15 to 20 bars after the entry of those signals occurred, was around 80%. So when I do a test and look at a piece of code and a portfolio, I know that I have a massive statistical edge, and so then what I have to do is try and work out, well, which ones are the best ones to trade. Now that could be that you just want to do large caps, it could be that you have your certain favourites that have strong fundamentals, it could be that there's certain sectors that you're interested in, and so there's a few ways that you can attack the problem. My own preferred method is I'd much rather have a bigger world and get lots of potential signals and then try and filter them out, possibly fundamentally or technically. Here what I've done is take the connection between BullWhip and the peak expansion Henkanashi support point. So this is one of my favourite ways of analysing support and resistance. And so if I was to get a BullWhip, in this case in Apple again, and it's at that final support point based on Henkanashi peak, then that would be something where I say yes, I definitely want to do that trade. I've now scrolled forward to that other signal in 2014, and it was pretty much exactly the same setup. So I had a major support point based on Henkanashi, and I get the BullWhip, so that was a valid trade as well. The other alternative is if you're just interested in certain sectors or stocks. So this is Skyworks. Looked at it before. Stunning stats in chips in one of the areas where it's pretty obvious that it looks like there's growth with the Internet of Everything. There's been two signals. One was in sideways all the way back in November, and here when we got a corrective phase with the Ebola crisis, we got a beautiful signal there where it got knocked lower by, I think, dropped about 20%, so it's a pretty serious fall. But when you're trading these great stocks, or stunning stocks I would say, it's very difficult to actually buy strength, because your risk can always go up because the market can just be marked down in a general correction. So what I like to do, if I identify stocks that fundamentally I really like, I simply wait for a corrective phase, and as soon as possibly a power play or a BullWhip comes in, then I'm going to pull the trigger. The alternative is to trade ETFs. Now sometimes you might get signals on ETFs, although power plays for example would be very rare on that because you just don't simply get the expansion of range. But if you want to pull the trigger based on some stocks that are in certain groups, then ETFs are possible. So what I've got here is XSD, which is the ETF for the area of what Skyworks is in. Actually there has been 2 BullWhip signals back at the end of 2013 and then more recently in May 2015, and what those diamonds are is the POPs divergence signal with the expansion of range switched on. So I got that signal on Skyworks, it says yes, I've made a low, here's a BullWhip signal, and then I could look to pull the trigger on the ETF just immediately. But if I want added confirmation, I could wait for a POP signal or possibly a time continuation signal, although that would be quite rare as well. So there's a few different things that you can use to pull the trigger and say that you're going to get involved in these sectors or individual stocks. BullWhip also has application in very long-term strategic placement of things like your pension or long-term investments. This is just an example again on a ETF, so this is the healthcare ETF, just showing when we had the debacle back in 2011. So I think we'd had a flash crash and then a very, very steep fall in August of that year, and it picked the bottom in the healthcare sector. There was another buy about 10 months later, didn't quite pick the low, but if you're using pretty sound money management, normally on any sort of trade on a strategic basis, it's difficult to have a stop that's probably less than 10%. So these are the only 2 signals that they've ever been. Going back to the confluence of signals, it's interesting to see that in this pharmaceutical ETF, PPH, got signals at exactly the same time. However, in this biotech ETF, which is BBH, we only got the signal on the lows of August 2011. BullWhip is available as a watch list as well, which is pretty much essential really, because it does take some time, because the calculation is quite complicated for it actually to come up on a chart. So create your watch lists, and then if any BullWhip signals are true, it will come up with a number 1, and then you can zoom in and see which ones you want to trade.